Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for ChartsandMarkets.com. Welcome back to the show, Bob.
Hi, Jim. Yeah, here we are, spending our Friday stint together, which I always enjoy.
As usual, when we can, we like to start off the show with questions from our listeners. Our first question comes from Justin in Berkeley. While it's obvious that the entire universe of goods, from semiconductors to cornflakes, is getting more expensive, the velocity of money still seems incredibly low, despite all the central bank shenanigans. Actually, we haven't seen any action from the central banks, Bob, so far. Wages are also not meeting the same outlandish inflationary pressures as goods. Where is all this printed money going then? Trillions and trillions of dollars a year just seem to never get into general economy unless the central banks are secretly hoarding cornflakes and other goods to maintain prices. So where is all this quantitative easing cash going, Bob?
Yeah, actually, this is the crazy part of central banking. They have a theory that if they push credit into the markets, it will then force a business expansion. And what this is the old confusion about correlation and causation. Yeah, you get a business expansion, you also get a credit expansion, but one doesn't cause the other. So in formal terms, that's called a primitive syllogism. So what is happening is that the Fed has been doing the same thing it did in the 1920s. You had a huge boom in commodities in 1920. They crashed. They got concerned about that there was not enough inflation, so they kept the pedal to the metal, not knowing or even understanding the dangers of a financial bubble in both stocks and bonds. So this is what the Fed is. This is right now immediately glaring. They spent most of the last 10 years worrying that inflation was too low, and then you get into the final part of a great financial bubble, and the business expansion part of that, you're going to get basic commodities going up, and then you got a rise in the consumer price index. And they're now going crazy about it. So I'm telling you, central bankers are crazy. So this is then, Justin, this is the problem. The central bankers are trained to believe that if they expand credit, that will prompt a business expansion. And it's a primitive syllogism. It just doesn't work. And then the other half of central bank intrusion goes back to before the Fed was formed, and that was the notion that, oh, yeah, we know that if you have a financial crisis, it'll be followed by a recession. So then they came up with the idea that the Fed would be the lender of last resort. There would be no financial crisis, therefore no recessions. It still seems like a very attractive theory, but according to the NBER, there has been 18 cyclical recessions since the Fed opened its doors for business in 1914. The theory does not work, but it will soon have possibly a post-bubble contraction that will again instruct economists on reality. And by the way, don't complain about high prices for cornflakes. You can't even get them in my nearby supermarket. Can't get Rice Krispies either. It's dreadful.
I have things like coconut shrimp and chicken cordon bleu for breakfast because I'm going on the dietary theory that if you consume 80% of your calories before 3 in the afternoon, your body has a better chance of burning them off.
Okay. Hey, we got to talk about that one.
Oh, well. Anyway, that's from my dietary nutrition classes that I've been taking. I've lost 30 pounds and kept it off for 2 years, so...
I've lost 20 pounds since May a year ago, and it's due to slowing down an appetite and seeking novelty. So, I don't know.
I swim 5 days a week.
Yeah. Oh, that's a good one.
It is. We have a question from Henry Solomon in El Paso. Are 3 to 4 year U.S. high-grade corporate bonds still a fairly safe investment at this time?
Yep, Henry, you know that one. That's in a financial storm, gold will always serve you well. You have to time when you're going to buy the gold stocks. But the other one is if you go to, say you get nervous about crazy stock markets and raise cash, you're going to get zero in any deposit, effectively, T-bills, that sort of stuff. And so one wants to get a little better yield, and you can get that from I'd go for good grade corporate bonds around the 3 to 4 year yield. Not a huge amount of risk. You won't get whipsawed too badly with price fluctuations. And the beauty of it is that if they're redeemed, and they are when they mature, they're redeemed, and you get your money at par. So you buy them at a discount, get the coupon plus potential price increase. And then for Canadians, it's even better because you could get the extra bit from the U.S. dollar going up as the Canadian goes down. So I think it's a reasonable risk to take on and get to somewhat slightly better. Oh, you're going to get a better income out of it. So, yeah, I'm all for it.
Our third question comes from David. Hi, guys. Thanks for the great show. Bob, after the past week, I've completely lost trust that the Canadian government won't monitor, invade, and rob my bank account for any reason, political or otherwise. I'm really angry and concerned that has to do with the Emergency Act. Could I move a lot or almost all my money out of Canada? Where could I put the money investments that would be safe from both the Canadian government and from the foreign bank holding my funds? Do you have some specific banks or firms or a country in mind? Thank you very much, David.
Yeah, David, thanks for that question. We had it a couple of days ago, and I looked into it, and yeah, the risk is enormous. The Canadian government has gone South American, Banana Republic stuff. It's crazy. It's not a government anymore. It is a federal system run by a political party that is enraged by finding there was some opposition from truckers who are interested in freedom. And it's pathetic to see. But I think the politics will be self-correcting here in Canada because the U.S. administration is crazy as well. Same with England. So there's unfortunately crazy politics. Poland and Hungary are going in the right direction. And also there is, and thanks to the Canadian Freedom Convoy, there is a growing movement for reform around the world. So I'd just tough it out and make sure you have some gold coins in case you want to leave the country and you have to bribe the border guards. I don't know. But your concerns are genuine and caused by a government that is enraged to find that it has an opposition. So, and I think that can be reformed by the fall. The Conservative Party could elect a conservative leader. You've got a minority government. There could be a non-confidence motion when the Conservatives are finally organized, and then an election. And I'm absolutely convinced it would be a landslide or against both the Liberals and the NDP. So, but very appropriate concerns.
Mark Leibovit, friend of the show and regular here on House Street, commented yesterday that the Indian ambassador to the U.S. pointed out Trudeau was all in favor of the massive protests by farmers in India, but now truckers are upset in Canada. It's a different story.
Oh, yeah, and Trudeau also with the Black Lives Matter, BLM movement, which was burning buildings and shooting at cops and killing people. And he was all for that and took the kneel for him. But just to have, and these are ordinary folk who have had it up to here with mandates on face masks, mandates on vaccinations. And Trudeau is too juvenile and too hating to even meet with the leadership of the Freedom Convoy. It is pathetic, and it's enough, I think, to seriously impair the future of the Liberal Party of Canada. This is very, very bad stuff.
Now we have a fourth question from Lauren. Hello, gentlemen. I've been a long-time listener. Thanks for your comments today. I really enjoyed your comments on global warming, the shift to battery-operated EV cars. My question is the battery. My thought is it'll wear out like any other battery eventually, so I've never heard any public comments on the battery, just on the cars. My question is, will the battery have to be replaced if, say, the car's 10 years old and the battery replacement cost is, say, $12,000? Do you junk the car and battery and buy another car or replace just the battery? Your thoughts and information would be greatly appreciated.
Thanks, Warren. I have a long-time acquaintance who is has a consulting engineering business to the automobile business on efficiencies in production lines and all that sort of stuff. And he does consult to the big ones, and including Tesla. So, anyways, the problem with electric vehicles is the battery. And that problem is that in one stage, it is not a dense form of energy. So you got to have a lot of it, and it doesn't carry you that far. Now, they're extending the range on these things. But the other problem is that the best output batteries are lithium-based, and lithium is a very volatile element in the periodic table, and a little bit of water and it goes crazy. And but then also, as you're both charging or discharging a battery, such a lithium battery or any other battery, there's very intense chemical things going on there, and you get a dendritic formation of metals in it, and they are bombs. And they have, whether they're in buses or cars, they just, and you crash them, you got a problem, but sometimes they just blow up on their own. Now, my acquaintance, the engineer, he told me about this 15 years ago, before they actually started blowing up. So the idea of a electric car is appealing because it doesn't emit any hydrocarbons. But in order to have an electric car, just the mining of exotic elements and all this sort of stuff to build a battery for electric car is a huge invasion of the environment. And then if you even go further to eliminate fossil fuels, and the beauty of fossil fuels or nuclear is that it's a very dense form of energy. You got a gas tank, a fuel tank of gas, and you can go 500 miles on that. So with an ordinary high-performance engine. So, and then if you go even further and are going to eliminate fossil fuels and nuclear fuels, you then with windmills and solar cells, you take up huge acreage to produce a low-density electricity. So that doesn't work all the time. The wind doesn't blow all the time, and the sun doesn't shine 24 hours a day. So then they propose that you're going to store the electricity with batteries. And I read somewhere that a field of batteries would be huge, and you'd get a day and a half backup with it. So it's unfortunately economically and engineering a very impractical idea, and I hope it soon goes away. But Warren, thanks for the question.
In Scandinavia, one of their solutions has been when you have wind and sun power, they pump water up a hill into a reservoir, and then they release that water at night.
Yeah.
And so it acts as a kind of a giant battery, but
yeah,
I don't know how much.
Sort of a battery, yeah.
Like how big of a scale.
Yeah,
and something that's almost totally,
using
something totally ignored right now, Bob, is tidal power. There's a company in Richmond, Blue Energy, that's got tidal power stations around the planet, everywhere except Canada. They did build a barge for a fishing lodge to supply power from the tidal force, and they said that barge could supply the electricity for a town of 3,000 people.
Yeah.
So,
the Bay of Fundy has one of the greatest tidal surges in the world, and they've been talking about that 40 or 50 years ago. But
yeah, and here in British Columbia,
they got to leave the decisions for what kind of energy is going to be used in the hands of the marketplace and the engineers and cost analysis. Now, with windmills and solar, the amount of energy it takes to create one turbine is greater than the amount of energy you will ever get out of it. So basically, dream world stuff, impractical, and again, if tidal generators would work, they're being tried all the time. I can remember reading about those things 40 years ago. So they're being tried all the time, and I wish them luck. But I hope they're spending their own money to develop them. But you can't get me to support a battery-driven electrical vehicles and the elimination of fossil fuels entirely. It would be a disaster of, well, as bad as the introduction of communism.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, some of the headlines that caught your attention today. The first one is Fitch downgrades Turkish debt amid soaring inflation.
Yeah, that's where the problem started, was actually March, a year ago. Headlines about South Africa, Turkey, and Argentina. Suddenly their central banks had run out of reserves, and which happens in speculative markets, so they then were forced to contract, and when you get that, the local interest rates go up and the currency goes down, and the usual. So that was the first hint, and in a year where a great bubble may conclude, one of the symptoms of the ending is outlying countries suddenly discovering illiquidity problems. And then, of course, since June, you've had China, a huge economy, it is already in its post-bubble contraction. So this recent headline is just another acute step, this time for Turkey, on the road to a post-bubble contraction. It's an important step, these things, and this is where even 2,000 years ago, the brilliant writer Cicero observed that if there was a financial credit problem in the eastern provinces, like the other end of the Mediterranean, in Phoenicia or whatever they called it then, that inevitably that financial problem would hit the financial center in Rome, and it would. And back in the day, there were speculative markets in Rome. They had mortgage markets. They had property markets. They had the equivalent of equities. And it was all at times wildly speculative, and this is always the nature of financial markets. So the failure in Turkey is important, and at some point that already existing post-bubble contraction that is really roiling China will eventually hit New York.
Yes, Marcus Tullius Cicero.
Yes.
Beheaded because he favored the Roman Senate over a dictator, the emperor.
And Jim, to show off some erudition, those of us who took Latin know that it's pronounced Cicero.
Cicero? Well, that's right. It's Kaiser, not Caesar.
Yep.
And they're Celtic. We used to say Celtic and Celtic, all that. Anyway, the next headline here. Rapid plunge in developer bonds shows risk in Chinese property. Well, Evergrande was the tip of the iceberg, and it was a very large iceberg, but now it's kind of cascading, a domino effect.
It's spreading out. Yeah, we start talking about Evergrande probably last May, I think, and these things are fascinating, and what is also fascinating, Jim, is the huge size of these companies. Hundreds of billions of dollars. And then all of a sudden, Evergrande gets on the wrong side of some municipality, and they now got to demolish 39 towers or something like that. I mean, it's really wild and crazy over there, but unquestionably in a post-bubble contraction.
And with these property bonds in China, Evergrande was a bully, and of course the Chinese government is nothing but the world's biggest bully. Yep. But they threatened employees if they didn't invest, they wouldn't get their wages or get their bonuses. So they were still buying those infamous empty apartment buildings up until a very short time ago, where China has these artificial cities with nobody in them. Yeah,
it's amazing. Absolutely amazing. Yeah, they stiffed their own workers, their own workforce. Yep. Not good.
Now, the Federal Trade Commission in the U.S. is warning about the high risk of some crypto accounts, especially the high-yielding ones.
Oh, yeah, Jim, this is wild. Because it's crypto and Bitcoin, these are very magic words. But all they are, as we've been noting from time to time, is a counter in order to speculate with. And with myself having spent certain amounts of time involved with Vancouver mining promotions, I know a bit about wild speculations. And decades ago, it used to cost something like 15 cents a share to create stock. And then there were trust company costs for transfer agents and all that sort of stuff. And then your office costs, and then of course you were trying to raise money for drilling on some gold prospect. But this Bitcoin thing, the cost of creating them, it requires huge amounts of energy and money. And even once you've created them, it costs a huge amount to keep them viable. So, and they're nothing more than a speculative counter that at some point when the speculators become exhausted, and they eventually will, and the whole thing rolls over, there's going to be a whole lot of operators hung up with very expensive premises and systems for creating and maintaining, here again, an electronic dream. So it's going to be interesting.
Now, of course, there's this debate going on about cryptos and NFTs, non-fungible tokens. Are they a great investment opportunity that will grow by leaps and bounds over the next few years, or are they really just an instrument of fraud that will collapse and leave you with nothing?
Well, they're speculative counters. And in any wildly speculative market, you can create all kinds of puts and calls and refusals and options and strategies. That goes all the way back to the early 1700s when you invented all kinds of such strategies. And this is just another one. So, but as we were talking before we started taping, Jim, you mentioned that some of them could be absolutely fraudulent, where they're taking in money like an ETF and supposedly positioning in a crypto, and they're not. And that reminds, just now I thought of it, the old bucket shops in New York and Pennsylvania and financial cities back in the late 1800s and into the 1930s. And a bucket shop is where they had a customer's room on the ground floor. You come in from the street, and they had a chalkboard and clerks there who had put the prices of the leading stocks on the board. And then what happened was that the customers would more or less place a bet on, a big stock, AT&T or something like that, but the trade wasn't entered in the New York Stock Exchange. It was just entered in the books of the bucket shop. So then there was all kinds of chicanery that would go on with that as well. So, you could say maybe some of these ETF, crypto, Bitcoin things are the equivalent of the old bucket shops. So it is going to be fascinating, Jim, when it comes apart.
Well, the stock market used to be unregulated, and then when the millionaires lost all their money, they put regulations in. Is the same thing going to happen with the cryptocurrencies? Right now, it's largely unregulated, but just wait until somebody with a big name loses everything.
Oh, that's conjecture. They came in with the early 1930s crash and depression. The authorities soon realized that, of course, you had a problem when you had ordinary banking concerns involved in Wall Street banking. So then they came in with the Glass-Steagall Act that separated ordinary banking from Wall Street banking. And then, 1999, with the party really getting underway in the financial markets, they removed effectively the constraints of Glass-Steagall. So, and the same thing happened in the South Sea bubble in England in 1720, in the early part of the year, with the bubble soaring. And the company was a quasi-government company that was helping fund the government. So they wanted to keep the money coming into the South Sea Company. But then it became a rage for new issues, and maybe there was more than 400 new issues suddenly floated. So the government realized that this was competition to money that would be going into the South Sea Company. So they came in with the Bubble Act, which was to prevent new issues of bubbles. And then in 1772, which was then another bubble, not as big as 1720, but with that bubble, they took that Bubble Act off the books so everybody could speculate. So there's nothing new in the financial markets, Jim.
Well, the big question, of course, I'm asked every day is, seeing how we're in the bubble of everything, real estate, hard assets, stocks, are we near the top, and is it going to crash? And if it crashes, how bad, and is there a safe place to be?
Well, each great financial bubble, 1929 was number 5, this is number 6, has had key characteristics. One of them is that the deflated price of gold goes down, which it did do, and gold stocks underperform the S&P, which they did do. The other one is that the real price of copper deflated. It goes up in the final stages of a boom, and it did, and it stopped going up, I think it was in July. Real interest rates come down. The long treasury got down to -6 recently, which is exceptionally low. So these key things, gold, copper, real long interest rates, have done what they do typically at the conclusion of a bubble. Now, they haven't really fully reversed yet, but they're no longer supportive. And then also, the financial markets have been, weakened recently, and I'm just looking now at the advanced decline line, which shows the breadth of the market. And when you're in a healthy bull market, the advanced decline line is going up because all stocks are participating. And the 80s peaked a few months ago, and as of this morning, setting new lows. And this, for any veteran in the financial markets, is a warning. So the hit to the markets was pretty severe, and then of course you're going to get a natural rebound out of it. So the question now is, will the bulls be able to drive it straight up to new highs for, say, the NASDAQ or the S&P or the New York Stock Exchange comp? And then I'm also looking here now at the advanced declines, and my guess is that they won't. And somewhere this rebound itself will run out of steam and roll over. And then we'll know for certain is the key things. Doesn't make new highs, starts to roll over. We would say that it's the start of a post-bubble bear market. And you look at China, and the post-bubble contraction has already started. So it is, Jim, it is very precarious out there.
And that's what makes our show so interesting. And that's what makes our show so interesting.
Yeah. Oh, by the way, our work on the bonds at the moment says they're kind of oversold, so there could be a positive trade out of there, and we'll watch and see for it. And also, the gold market has had some recovery recently, but we're still not at the point where we could call for a lengthy bull market in gold that you typically get with a post-bubble contraction. As a matter of fact, some of the greatest bull markets for gold in history have been in the post-bubble contraction. So that's ahead of us, a multi-year bull market for the gold sector.
Bob, thank you so much for this analysis. My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. As you heard, Bob loves to answer your questions. You can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.